Following up on your experience as an angel investor, I know that we shared, time and space together, and you mentioned about that being your experience. So I've been looking at a few businesses that I want to do. This is me wanting to do and to help them to start their process, I guess get a leg up. I'm still unsure about the real formal process or how formal it should be. Because I know that you mentioned that, in past conversations, whether it was in our class or just, in general, that we have to be prepared for the loss. What does that look like in terms of percentage? Is it based upon industry average or just knowing that within the first, 5 years that businesses may have a possibility of not being successful and that you just may lose your money?
It's not just losing your money, losing all your money in that
Mm.
business to a point where whatever you put in, it's not coming out. I say that let's just think about this, right? They have statistics of how many businesses make it past 1 year, how many businesses make it past 2 years. Those numbers don't change in investing, or those numbers don't change for startups. That's what you're facing. And the companies, the 10% of companies that may make it out, that doesn't mean they're wildly profitable either. So when you're looking into this and when you're negotiating your deal and when you're figuring out how you want to utilize your money, for angel investing, in my opinion, it shouldn't be money that you can't lose. My wife, she's like, hey, what's going on with this company and what's going on with that company? Like hearing this late, but two of these companies, they just, one is shutting down and the other one is going to probably shut down as well, or might not make it through unless they're negotiating acquisition that can save them. If that goes well, yes. If not, they may have to shut down. And so I'm looking at 5 figures of a loss. So that's something just to consider. I think on top of that, you have to know angel investing is not liquid, meaning unlike the stock market, you can't just get your money back at any time. If you buy stock, you can sell it. Usually during Monday through Friday, you can just sell it during normal business hours. In angel investing, you may be locked up 5 to 12 years before you may get a return, right? So understand the lockup period on that. I know everybody glamorizes it, but that's what you're looking at. Third thing I would say is some people in our GS cohort asked me about this, and because of the risk, let's say if you look at maybe 9 of 10 companies don't succeed, if you're doing well, most people are not even getting that 1 out of 10. It has to be so profitable, it makes up for the other 9 plus multiplier, plus
Okay.
the time you're waiting for. So it can't be your regular mom and pop, right? It has to be something, in my opinion, that's super scalable to make up where, okay, maybe I make 100x of this and offer one and that makes it worth it. Better off 1,000, better off 10,000. And that really makes it worth it because it's unlikely most people are going to hit 1 out of 10. Usually people might hit 1 out of 30, and then you're playing a numbers game. Do you have enough liquid to risk 29 companies going down before finding the one, right? With everything else that's going on, your own business that needs its own capital. So these are things to think about. Especially if you run your own business, it's not only about the money, because the process to really do well, you have to do a lot of due diligence. So it can't only be out of the money. You kind of want to help these people and willing to risk your own business to do it. So that's something to think about.
For those businesses that you invest in, and at some point the business owner comes back to you, year two after you invest and say, hey, things are not looking so well and I'm looking to sell my business. Could I, if, I see opportunity to turn the business around, buy it? Is that something that can be, I guess, renegotiated in the agreement terms or is best practice? What is your experience with that?
So that's something that can be negotiated in the agreement terms. So one of the companies that I have invested in, there's opportunity for them to sell the business. Some other investors, business owner can't necessarily sell the company by themselves. They have to typically get approval from the board and sometimes from the shareholders as well. So now even if they want to sell it to you, now the shareholders may demand, hey, I want X return on this. So I want you to sell it for at least 2 times my investment or at least 5 times my investment if I sell it. And you have to look at it like, is it worth that to me? And sometimes shareholders may be hard-headed, not realizing, hey, this business, if I don't sell it, it's going to go to zero. For whatever reason, maybe rather that it goes to zero than it's sold to somebody else. So it's not just negotiating with the CEO, it's also knowing who is backing them and what are their interests. Can I buy it off them? And then do you want to do that work? I typically invest in companies. 4 out of the 5 sectors I invest in, I have no operational experience with it. So I'm not going to take over those companies. Maybe I could, but I wasn't investing to take over those companies. So, but people have different MOs, right, when they're investing. So that might be something you want to do. And also, you can start small. You can start with, depending on where you're investing, with a few $100s. If you're doing Angel List is like a platform for investing in some startups that have via syndications. You can do something as low as 1,000, right, to kind of get your feet wet. I would say don't jump in too hard at the beginning, right, because there's tons to learn.